Okay, I'd like to introduce you to the Tech One trading method. And again, as you may have already read in the trading manual, there are two specific locations that I use this Tech One trading strategy. So here's the Tech One trade. We're looking at a 30-minute chart. And something that I'd like to share with you is that to me, at least the way I use this technique, the fulcrums, the daily fulcrums are very important. They oftentimes provide support and resistance. And as you can see here, what starts to happen, these yellow lines on the chart are the daily fulcrum. They often provide support and resistance, as we can see here on the 30-minute chart. Oftentimes they will occur around actual support or resistance that we can see on the larger time frames. Again, this is a 30-minute chart. And they will also sometimes line up at psychological levels, where they have even a bigger impact, or even a retracement level, like a Fibonacci retracement level. When multiple forms of resistance stack on top of each other, they're in a way like a compounding effect. They have a stronger hold. And we want to be careful trading around those ranges. So we only take the Tech One trade off of resistance or support. We really don't have any support here. We've got resistance though. Or when price breaks out of consolidation and retraces, consolidation being something that sets up like a continuation trade. Now the Tech One candle pattern is either an engulfing an engulfing bearish or bullish candle pattern, or a morning star or an evening star pattern. Now the first thing we want to remember when using the Tech One trade on a small time frame, this is on a small time frame. This will not have the same effect on the 4-hour or the daily chart, but on a small time frame like a 30-minute chart, if we're going to use the Tech One trade off of resistance, to say this is a pocket of resistance, we can clearly see it. It's tested it 1, 2, 3 times here. Here's the fulcrum. If we're going to trade it, we need to wait for the candle pattern to close and complete. So I can't take this trade until I see one. And the other thing is, if I see the first one, I may let it go and wait for the second one. Well, we can always look back in hindsight and say what we would have done. But in the heat of the moment, when the trade's actually setting up, this is where that closed market analysis exercise comes in handy. This will help you determine whether or not you should take a trade in the heat of the moment. In other words, we're only going to be analyzing and looking at closed candles. So let's take it out a little bit further. Here's a second Tech One. This is a second strong Tech One trade opportunity. If you didn't take this one, you could take this one. Technically, there's the third one. Here's the first one, here's the second one. On the third one on the 30-minute time frame is the one I will take if I can find some clear resistance. The other thing we might want to do is draw a little resistance line right here at that high, right there, that high. And we notice that no candles closed above that high. So there's a pocket of resistance right in this range. Again, here's that Tech One candle pattern. This is a third one that we see. So the entries on the close of that candle at 98. So we'd be looking at about 78 as our first target. So we'll take this out a few more candles. And we get another Tech One trade. So we get another one here, and this is also during the London session. This is a good trade. This does not have to occur. This does not have to take place on the 1-hour chart to trade this small scalping opportunity on the 30-minute. Here's a trade. On the close, 83, we'd be looking for approximately 63. And here it goes as low as 43. Now, let's talk about stops. If you use the trade correctly at the right time, meaning when there's more momentum off of support or resistance, or waiting for that breakout and looking for a retracement and entering off of the retracement, if you do all those steps correctly, if you use the trade at the right location, when we trade the pound dollar, we will typically earn 20 to 25 pips per trade on this pair. But if we're looking at a 20 pip target or a 25 pip target on the pound dollar, we would probably use a 20 or 25 pip stop loss. So let's say we're going to pick up 25 points. The entry was on the close of 83. So we'd be looking for 63 and probably 58, not including the pip spread, depending on what your broker's pip spread is going to be. And price goes down as low as 43. So even including the pip spread, this covers it. We're covered, we get our 25 pips. But this retracement, after the entry on the close of that Tech One candle pattern, it goes back up as high as 2. So this was really close to a 20 pip retracement. Occasionally it will happen. There are slow periods even during the London and New York session. There are times or moments when it's really active, and then it'll go through a quiet phase for an hour, hour and a half, maybe 30 minutes. Here we just get a 20 pip retracement, which was okay. This was fair. This was all right. So it's a really safe trade. The continuation trade is a little different. The continuation trade is something that we expect price to continue to trend, and we're looking for 50, 60 pips, and the stop loss level is just about the same. So it depends. You really have a great deal of flexibility with this strategy by using these two different techniques. Okay, now we're going to look for the other location to take a Tech One trade, which is identifying a breakout of consolidation and waiting for the retracement to occur to a support or resistance level. And once we see that retracement occur and that resistance or support holding, we look for the Tech One candle pattern. So here we have a small range of consolidation right here. We're waiting for a breakout of this range. The first thing we need to do is identify that continuation signal candle. This is not a continuation trade, but we're looking for the signal candle to identify the breakout. Then we wait for the retracement because the continuation trade has a larger stop loss. So here's our breakout candle, and this occurs on the hour, on the half hour. So we need a 1 hour candle. This one closes on the hour. It opens at 8:30, closes at 9. So this is our close completed continuation signal candle right here. We wait for price to retrace to this resistance level, which would then become a new support level, and look for a Tech One candle pattern there. So let's take it out a couple of candles. Now it's retracing back down to old resistance or support. It doesn't always hit it perfectly. Sometimes it'll hit it, sometimes it'll fall short of it, sometimes it'll move a little lower. These are general areas. You have to know when to be flexible with some of these strategies or some of these principles. We're looking for pockets or areas of support and resistance. And the reason is not every trader is going to see the exact same thing. So now what we need is a Tech One bullish candle pattern if this trend to the upside is going to continue. Here is our Tech One candle pattern. This can be traded on the close of this candle, and we don't need to wait for the 1 hour candle to trade the Tech One. So we're looking for 40 for our first target. And we get a retracement, and it goes as low as 95. Our retracement, our stop loss level is 90. This one takes a little bit longer than usual. And here it hits our target. Goes as high as 46. This also continues a lot higher because of this continuation trade. Because at this point, when we actually close our trade, we get the entry for the continuation trade. And you can see it moves up a lot higher according to this one.